Boss and hopes of a turnaround at Myer. But the biggest story of the week was, of course, the Banking Royal Commission, which has continued with revelation after revelation of misconduct and deception. Our coverage starts with Monday's hearing, where the ANZ Bank admitted it knew many of its advisors were giving bad and unlawful advice to customers. And in several instances, years on, the customer still hasn't been alerted to the fact they've been ripped off and are entitled to compensation. Well, it comes as the bank reveals its legal costs will top $50 million by the end of September, and the Prime Minister admits the Royal Commission should have been called sooner. Daniel Ziffer was there.
ANZ knew that its financial planners were giving advice so bad that they were breaking the law. And it knew this was happening more and more often.
It's the probability of systemic provision of non-compliant advice.
But for at least 4 years, the bank accepted the risk.
The Business Risk and Compliance Committee decided to accept that high risk again with another risk treatment plan.
Yes, that's correct.
The Royal Commission heard ANZ was focused on detecting inappropriate financial advice after it happened, not before. ANZ directly employs 277 financial planners. In the past year, about a quarter of them were disciplined.
We have exited. We have performance managed 71 advisors in ANZFP just in the last 12 months, and over half of them have exited the business through resignation or termination.
But of the 602 representatives not directly employed by the bank, we don't know. The bank's own figures show instances of inappropriate advice from ANZ financial planners exploded, from 60 in 2008 to 2,810 in 2015. And the biggest problem was whether the advisors were focused on their clients or simply getting paid.
The top high-rated issue from audits in this period is a failure to comply with the requirement that the advice is likely to be in the best interests of the client.
Yes, I can see that.
AMP was also back on the stand today, being grilled about a trio of bad advisors. One, known as Mr E, charged two customers a quarter of their superannuation in fees alone. AMP knew about it last year, but has still not contacted the customers.
Ms Britt, with respect, you haven't started that process. These two clients don't know that they received inappropriate advice because AMP has not told them.
That's correct.
The focus on wealth management continues this week. In May, the Royal Commission will move to examine small to medium businesses.
The Royal Commission continued with explosive revelations of how a bank customer was impersonated when seeking financial advice from a high-profile planner. Financial planner and TV host Sam Henderson also admitted he misled clients about his qualifications. Here's Daniel Ziffer again.
Sam Henderson is a celebrity financial advisor. Appearing on The Project, in Fairfax newspapers, he even had his own show on Sky's Business Channel.
Good evening and welcome to Your Money, Your Call Retirement. I'm Sam Henderson, CEO
In 2016, his company was named Financial Planning Practice of the Year. But his advice to client Donna McKenna was far from award-winning.
If I'd followed your advice, I would have lost $500,000. You're supposed to be the expert.
Donna McKenna isn't naive. In her day job, she sits on the Fair Work Commission. She said Sam Henderson pushed her into opening a self-managed super fund, despite telling him it could bankrupt her and that could cost her her job.
I can't believe this. I've been to see the Financial Planner of the Year and this is what you get.
But it got worse. The Commission heard a recording of one of Sam Henderson's employees impersonating Miss McKenna in a call to her former super fund.
I just want to know what my current balance is, please. What is the amount I can roll over?
Was that Ms McKenna calling?
No.
Was that your customer service officer impersonating Ms McKenna?
Yes.
Did you know that your employee was impersonating Ms McKenna, Mr Henderson?
No, I didn't. For the record, that I was not aware of the impersonation. I was quite disappointed and I certainly apologise for that behaviour of my staff member. I was incredibly disappointed. It was inexcusable.
The Commission also heard Sam Henderson published a financial services guide which falsely stated he held a master's degree.
And did you have a Masters of Commerce?
I did not. I studied a Masters of Commerce. I think this was taken over from a previous bio.
But you did not at any point prior to this document have a Masters of Commerce, did you?
No,
Thank you. So that's inaccurate in this financial services guide?
it is, yes. I apologise for that.
Earlier today, it was National Australia Bank's turn to be grilled. It admitted that hundreds of its employees had falsely witnessed the signatures of more than 2,500 customers. Those signatures were on documents naming the beneficiaries of the customers' estates, potentially putting those inheritances at risk.
And the shocking revelations kept coming as financial planners stepped into the dock, facing allegations of protecting their own. One industry association didn't expel a banned advisor, while the other admitted to protecting the identities of wrongdoers. It also proved to be a week of high drama at the Royal Commission, with one witness collapsing while on the stand. Daniel Ziffer reports.
When a client complained about bad advice from Sam Henderson, the celebrity financial planner didn't hold back. Calls and emails from Henderson to the investigator, the investigator's boss, and finally the CEO of Financial Planning Australia were tendered to the Royal Commission.
It's precisely the problem, Mr de Gory, the subject of the complaint having these direct discussions with those who are investigating him.
As the investigation unfolded, the high-profile member appeared to threaten the head of the member body. "My peers would be interested in the workings of this process," he wrote in an email, "and what it means to be a member of the FPA." Shortly after, the body agreed to lower sanctions and to keep Henderson's name suppressed.
So the FPA offered to keep Mr Henderson's name confidential.
I'm not aware as to how that particular component got into the final terms.
There was more. In a letter, the organisation's head of professionalism begged the Royal Commission to not identify Sam Henderson, because doing so would cause significant damage to his reputation.
How is it possible to hold members accountable for their misconduct if their identity is kept confidential?
The complaints process at rival body, the Association of Financial Advisors, isn't any stronger. A planner, banned by ASIC from providing advice for 5 years, remained a member because the regulator's report was likened to hearsay. Dover Financial's Terry McMaster copped sustained questioning about his complex web of companies and about policies that shielded him from customer complaints.
It is Orwellian to describe this as a client protection policy.
I agree with that.
It is entirely misleading.
Changed. Yeah.
Entirely misleading to call this a client protection policy.
It actually wasn't intended to be misleading. It sort of evolved.
Towards the end of the day's hearings, he collapsed in the witness box and was taken away in an ambulance. Federal Treasurer Scott Morrison today said he was prepared to extend the Royal Commission, due to report in September, but hasn't been asked.
Daniel Ziffer reporting there. Already, the boss of AMP, Craig Mellor, has been shown the door, but the Royal Commission has also seen increased pressure on directors to step down. It comes amid calls for much harsher punishments. Here's finance correspondent Philip Lasker.
Fraudster Bernie Madoff stole billions from American investors. 9 years ago, he was sentenced to 150 years in a US jail.
He structured his whole business for the purpose of sort of ripping people off. So far what we've seen coming out of the Commission, it certainly looks like some of the financial services sector have set up parts of their business to be ripping people off.
People's livelihoods have been put at risk, so you can't underplay just what a big issue this is.
The punishment must always fit the crime.
The government has belatedly mentioned jail while introducing tougher penalties for breaking the law, but people are sceptical.
The philosophy out there in the marketplace with regards to white-collar crime in Australia is, the bigger you are, the safer you are.
The banks have been said to be too big to fail, but they're also too big to manage, too big to regulate, and too big to jail.
Jail is what Peter Morgan thinks should be the outcome for some directors and managers.
There has to be results, and they just can't be at the small end. They have to be at the big end as well. And there has to be a fright at the bigger end of town that regulators are going to be tough, and they're going to be damn tough.
And I think that is a problem in Australia. We just don't see people go to jail.
We're also not seeing directors front up to the Royal Commission.
You're seeing foot soldiers appear, and the boards, as they generally do in Australia, are off wherever they are, missing in action for one of them, and not being brought to account.
Australian icon AMP has admitted to misleading the regulator and interfering with a report into the company's poor corporate behaviour, such as charging clients for services they didn't provide.
We think that the board needs to take some accountability, and we expect to see some changes at board level, which we hope might be announced before the AGM, but we'll wait and see.
Investor groups say the premature departure of AMP's CEO, Craig Mellor, is a small price to pay for the company's disgraceful behaviour. They're dismayed by the lack of transparency surrounding any payout he might have received.
I think transparency has not been AMP's strong suit to date. Given everything that's happening, you'd think it would be a good idea for them to come out and explain as much as possible around his, his sort of second sacking in 1 month almost.
Now industry funds are demanding a review of AMP's remuneration structure, like a clawback of bonuses, board sackings, and measures to stamp out the problems so they don't recur.
We're really looking at people who whose incentive has been to rip off customers.
The Royal Commission has covered a lot of ground in a short space of time, but it's the tip of the iceberg.
It's not touching the wholesale end of the market. It's not touching, it's not touching what fund managers charge and what sort of products they're selling in terms of whether they're index hugging or anything like that.
And while parts of the financial sector have escaped close scrutiny for now, some have blamed this mess on shareholder greed.
Shareholders have never said, sure, go ahead and generate profits unethically and illegally. If your reputation's trashed and you're sort of undergoing a Royal Commission, there's a big question mark, and we've seen share prices go down, as to whether or not that's long-term sustainable value creation. In fact, it's being trashed.
That may be true for AMP, but the big four banks have yet to pay a heavy price. Consumers simply have nowhere else to go.
Philip Lasker there. One of the country's top business leaders has slammed corporate Australia for not coming out and condemning the behaviour exposed at the Royal Commission. Former Ethics Centre chairman and ASX heavyweight Jeff Cousins says as a result of their silence, businesses will all suffer from new regulations and get no tax cuts. Mr Cousins had AMP as a client for over 30 years, and he spoke with Elise Morgan.
Jeff Cousins, the CEO has stepped down in light of what's happened. Do you think that the board and the directors are hiding behind that?
Well, I think they are to some degree. I'm astounded that the chairman of the company is still there, because quite apart from those general issues which I've raised, there are two very specific issues relating to the chairman that should have meant that she went before the Royal Commission ever started, really, because the board would have known about these things. They would have known that she gave instructions, effectively, to change what was supposed to be an independent report, and they would have known that she chaired the committee which made a decision to conceal what had happened from the customers.
What's protecting the chairman? Because we've seen in multiple occasions, not just at this Royal Commission, but with other financial institutions, including big ones like the Commonwealth Bank, where boards and directors knew that there was wrongdoing inside the bank, that it was a result of the culture that comes from the board, and they all remain in place. Why is this happening?
It's a complete abrogation of the duty of those directors and a misunderstanding of where their duties lie. You hear often this kind of behaviour rationalised by people saying, well, it was in the interests of shareholders not to tell the customers. This is nonsense. This is directors misunderstanding entirely what their responsibilities are.
The Corporations Act is fairly clear in what it requires of directors. Should there be jail time for what's gone on?
That's a criminal offence that you need to prove, so that's very specific. I can't really give you any useful point of view on that, but I can say, having spent a lifetime in the corporate world and spoken about ethics in business and so on and so forth and written about it for many, many years. This is a serious breach of business ethics and just normal common morality. And it's an intentional one. I mean, it wasn't the board didn't know about this. It actually made decisions to conceal these things from customers. It made decisions to continue these practices. That's unconscionable.
What is it that's wrong with corporate Australia and with our regulator that is allowing these directors and the chairman to remain in place despite what we've heard?
Well, look at what the business world did when the Banking Royal Commission was first suggested by Labor and Bill Shorten. And frankly, you must give credit to Shorten and Labor for persisting with that. What happened? The Business Council of Australia came out and opposed it. The Bankers Association came out and opposed it. The Minister, Kelly Adwai, said it was reckless.
So what do you think the Business Council should actually do then when, you know, their membership is made up of these really large financial corporations that are being exposed? I mean, where do their loyalties lie?
Well, they certainly don't lie to protecting business practices that are clearly immoral, unethical, and possibly also illegal. They don't lie there. That doesn't serve business well. The reason that I've been a businessman all my life, I hate to see this. And the reason that people are suspicious of business and do not have a good view of it is because it hasn't acted well.